If you bought altcoins and expected this cycle to change your life, you're probably a bit confused right now. Bitcoin went all the way up to $126,000 and headlines were screaming the bull market is here. And yet somehow your investments didn't really recover. The hype was everywhere, the expectations were massive, but the results just didn't match. This video isn't about hopium or doom, it's about why this bull market felt completely different, why all season never really showed up, and what could happen going forward. When people look back at this cycle, they're probably going to say Bitcoin did good, and that's true. Bitcoin had a legitimate bull market. Strong inflows, ETFs, institutional demand, new highs. On paper it looked like a decent cycle. But the rest of the crypto market tells a completely different story. Outside of Bitcoin, the market never really caught fire. The so-called alt season everybody was talking about, 10x's everywhere, the time to make some serious money, but that never truly happened. Yes, some individual altcoins did hit new all-time highs. That's always going to happen. But when you look at the collective alt market, it spent most of the cycle bleeding against Bitcoin. So the real question isn't when alt season, it's why didn't it happen? The biggest difference between this cycle and previous cycle is pretty simple. The interest and the retail investors never really returned to the crypto market. Think back to 2017 or 2021. Crypto was everywhere. People who had never invested before were suddenly asking about random altcoins. YouTube channels gaining thousands of subscribers in weeks. X was full of the next 100x posts. Google searches for buy crypto were exploding, but this time none of that really happened. If you look at YouTube views, subscriber growth, Twitter mentions or Google trends, the interest just isn't there. We never reached that full-blown euphoria phase where everyone was just piling in their money. And that matters because retail is what drives the alt market. Institutional investors don't chase small cap altcoins, they buy Bitcoin. ETFs, funds and large players are mainly focused on Bitcoin. So when the institutional investors aren't really interested and the retail investors never really came back, the alt markets simply don't have the fuel it needs to run. Now combine low retail interest with another issue this cycle, the explosion in the number of altcoins today. During the 2021 alt season, there were just over 4,000 tracked cryptocurrencies. Today, that number is close to 20,000. And that's not even counting the millions of untracked meme tokens and short-lived projects launching every single day. These are just the ones that are tracked and traded on major platforms. So what happens when you take less retail money and spread that across 5 times as many projects? Liquidity simply becomes thinner and thinner. And when liquidity gets thinner and thinner, the pumps get smaller and the runs get shorter. And every drop hits harder because there's no depth underneath. In earlier cycle, money rotated from Bitcoin into smaller altcoins. This time, that rotation spreads across way more projects, most of which offers no definitions. Another uncomfortable truth is that people aren't as naive as they used to be. After years of scams, rug pulls, and broken promises, the average investor is way more skeptical. When the same influencer promotes the next 10x gem for the 10th time, people aren't just gonna jump into that anymore. They just leave. And that's exactly what happened to a huge portion of retail. Most people that bought altcoins at the peak of 2021 are likely still in the red today. For many of them, crypto didn't just underperform, it burned them. So instead of rotating into Bitcoin and waiting patiently, they decided to leave the market and decide that they were done. And that's why the social engagement is so low right now. That's why altcoin narratives don't spread as wide as they used to do. Retail exhaustion is real and it is showing in the price. Now a lot of people blame everything on the Fed. Rates are too high, QT are killing risk assets, liquidity dried up. But if that was the full explanation, then why is stocks doing so good right now? Why is gold at new all-time highs? If macro conditions were truly bearish across the board, we wouldn't see this kind of strength in other markets. Yet institutional are assigning capital, just not altcoins. Bitcoin meanwhile has changed. At this point, Bitcoin is closer to an institutional asset at this point. Spot ETFs, funds and long-term holders have a huge portion of the supply at this point. Bitcoin acts more like digital gold than a risk trade on. And that's not a bad thing, but it explains why Bitcoin can do so well while altcoins can't. It also forces investors to ask a hard question: why take massive downside risk in altcoins when stocks, metals, and even Bitcoin offers a longer risk adjusted return? Zoom out to a 4-year time frame. If you bought altcoins at the 2021 peak, you would still be underwater to this day. Many never even got close to the previous highs. But if you bought Bitcoin back then compared to now, you are doing fine. If you bought stocks, you're probably up a good amount. If you bought gold, closer to a 2x if not even more. Capital doesn't care about narratives. It flows to what performs. And right now, outside of Bitcoin, altcoins haven't justified why its risk is worth it for investors. A big reason why many people were expecting this alt season this cycle is because of history and previous cycles. We saw huge runs in 2017 and 2021, so the assumption was once Bitcoin had made its new all-time highs, then the alt market will follow and make its new all-time highs. But when you break down the data, the assumptions doesn't really line up. One of the most usual ways to look at this is the total free versus Bitcoin chart, which Benjamin Cohen has talked about quite a bit. Total free represents the market cap of all altcoins excluding Bitcoin and Ethereum, and when you compare it to Bitcoin, you can see how altcoins perform relative to Bitcoin over time. Historically, every major alt season started only after total free relative to Bitcoin had already put in a long-term low. Altcoins didn't outperform during the early or middle stages of a cycle. They did later once condition had already shifted. Right now, altcoins sit roughly at 37% of Bitcoin's market cap, which is not near the same lows that we have seen in previous cycles where it was 25%. What's also interesting is the timing. Bitcoin topped roughly 2 months before QT ended, just like it did in 2019. During that period, Bitcoin dominance rose and altcoins continued bleeding. Even after hitting their lows at 0.25, they stayed suppressed for over a year before any real alt season began. That didn't happen because people were excited. It happened because monetary conditions finally loosened. In 2017 and 2021, we were already in aggressive easing environments. In 2019, we weren't. This cycle looked way more like 2019 than a full-blown all-season environment. History didn't repeat the way people were expecting, but it did rhyme. There is also a more uncomfortable idea with considering large players want maximum liquidity and minimal resistance. That often means pushing sentiment to extremes. Every cycle follows a similar emotional pattern. Euphoria draws people in, price bleeds slowly, frustration turns into capitalization, interest disappears, accumulation begins quietly. Right now, sentiment towards altcoins are extremely negative. Most of retail has already sold at a loss. Fear is high, the expectations for a alt season is very low. At the same time, optimism is extremely high in other markets. Stocks and gold are crowded trades. Historically, those environments don't last forever either. That doesn't guarantee a alt rally tomorrow, but it suggests that maximum pessimism comes right before a major shift. This cycle is different in the way that crypto is more mature now. There are far more projects to choose from. Retail are more cautious now. That means that future alt runs are likely going to be more selective, I think. Instead of everything pumping together, capital is going to concentrate on fewer coins. If monetary conditions loosen and capital decide to leave overextended markets, then Bitcoin and eventually altcoins could benefit from that. But expectations needs to be realistic. This wasn't a cycle like 2017 or 2021, and understanding that might be the biggest edge you can have. So that's why altcoins disappointed so many people this bull market, not because crypto is dead, but because of the conditions that powered previous alt season simply wasn't here at this time. If you found this breakdown helpful, make sure to like and subscribe. Comment down below your thoughts. I love to hear from you guys. Thank you so much for watching, and I'll see you in the next one.